This is Sparta!
Alrighty, a little bit of delay in today's stream. Had a couple issues at work, had to get away a little bit later. A few clients getting smashed, mostly in the Kiwi and the Aussie. Those that held on are a little bit happier now, but really, I mean, they're quite lucky. And by all regards, the next move should be higher in the Kiwi. But you never know with this sneaky little pair. It's starting to surprise a little bit. It's starting to, I mean, it's always been a little bit trolly like this. It's always had that element of doing the exact opposite of what everyone wants it to do. So, I mean, this rally, that's predictable. If we sell off aggressively now, that's going to catch some people, because the market had turned into longs quite quickly. Everyone had been buying this dip, um, spiked to fresh highs, fails to sustain, and now they're, perhaps now the longs are the ones that are maybe caught on the wrong side here. Very interesting and quite aggressive selling throughout the Asia session. If that continues, that's going to be, that's definitely going to catch traders out, right? I mean, unless you somehow still short and haven't got stopped out here, then the people who the closest stops on the downside. And the market sometimes does that. The Kiwi does it a lot more than others. Reverses, just because it's easier to do that with the Kiwi. It's such a small currency. Aussie's holding its own. Doesn't look healthy though either. So there's a few problems with this whole sell US dollar theme that we developed last night. So last night I was very excited about selling US dollar. Today I'm not so much. Really, we should have got out of all those US dollars late last night. I went to bed, everything was looking great, and then we had that poor crude oil numbers, a bit of a sell-off in the stock market, and things came into Asia looking a little different. And Asia continued with that little bit of US dollar buying as that risk off spread. Oil is still under pressure. I've closed a couple of trades here. Actually, I haven't closed too many on this one, but I'm closing dollar CAD. I no longer accept that one as a trade I want to be in because oil has collapsed so much. Got out of the pound Kiwi as well, just because the Kiwi's misbehaving, and the euro trade I've got on review, and the pound trade's just killing me here. The pound trade, I mean, I did not see that reversal coming. I thought the potential, we got that short squeeze beginning, and so now I'm on the wrong side of the market, and it's going to potentially down here actually go in a couple of hours. That short squeeze, when I went to bed, it was doing this. It was at the highs, and then when I woke up, it was down here. I was like, wow, what's happened now? What's going on now? What's the market done now? So I mean, this is a little bit of a time to teach as well. It's like, don't get too attached to a new trade idea or a new position in the market. It doesn't take much to change things. So all you needed was one day off of pretty heavy selling in stocks and one day of a sharp reversal in oil, and US dollar's got its bid back. Also, it helps to have a collapse in the UK bonds. That's the big thing which got the pound getting ripped apart left, right, and centre at the moment. That's what you're looking at there is the long-term interest rates you can take a look at for the UK. So now they're dropping them all the way down to, not at the same stage as BOJ or the ECB yet, but quite low. 0.5% is what I heard last on the 10-year gilts. But that's a huge change, and that sort of adjustment does affect the currency. And maybe only a day or two, but regardless, it's interfered with the whole plan. And so, really, I mean, the best thing to do is probably just close these, take the loss. Even with the Aussie Kiwi now, it's had a nice recovery. But really, I mean, it's pretty 50-50 almost at these levels. So I'm potentially closing out all those trades, just going into some simpler trades, trying to get something new, right? Something safer. These trades are not working out completely well. I mean, it's flat overall, but that's not what you want. You want to make money. And this is after 3 or 4 days trading, right? You don't want to be flat after 3 or 4 days trading. Not if you do this, for a living. It's like, it's a lot of time, a lot of energy for nothing. So Yeah, very disappointed that the market reversed. Very disappointed that I was wrong. But you're wrong. You're wrong 30% of the time. It's just part of the game, right? You don't get too attached. You don't get too upset with yourself. You move on and you adapt quickly to the new scenario. What's happened since the start of the European session's been a bit wild. I'll get those charts up for you in a sec. Yeah, so just out of the CAD now. I'm not going to be involved when the oil's so weak. Aussie yen, I'll review that in a second as well. Euro yen, I'll review that in a sec. Euro dollar is also up for you. But I'm thinking about closing out the pounds and the Kiwi, Aussie Kiwi, just because mainly I don't know where they're going, right? That you don't want to be in a trade where you're like, well, this can go to 125, and it literally can. There's no absolute reason for the rally now. If the US dollar sell-off is off for the time being, the whole trade idea doesn't make sense. I mean, it was dangerous to begin with, but now it's just almost suicide. Let's have a little look here. Well, it's not suicide, it's still 50-50, but it's like, there's better times to put your money to work. So, yeah, disappointed, but it is part of the game. I do lose. Can confirm. Alright, so let's close out these pounds. Close out the pounds. Close out the Aussie Kiwi. We can come back into those trades if something changes, right? There's no reason that I'm locked out of them. It's just sit to the side and remove. In regards to the Euro yen and dollar yen, I'll have a look at those. I'm not really impressed with dollar yen recovery at all, and Euro is suspect now. So Euro, it's breaking my heart. I thought for a second that we're going to do something. Thought for a second that it was going to try and break its range, and it's just go right back smack bang in the middle. I tell you what, I'm going to give it another day. If we start rallying back towards 1012, I'm going to let it continue to hold it. If for tomorrow we're down in the mid 111s, I'm going to close it. Okay. So it's I'm not completely convinced that the selling US dollar thing's off, but it definitely had a good shot at reversing yesterday. So you look at some of the key little pairs that show reversals. Kiwi's a little bit off, but it's fine. The Aussie showing signs of failure at the top side. Pound definitely. All right, little nascent rally. Reverse sharply. Euro. I mean, it's stalled. Couldn't get past that 1 and 190. All right. I mean, dollar yen is a little different. Dollar yen's sort of decoupled from the rest, but no pair really outperformed. Any pair that did got shut down, like the Aussie. It's there's definitely selling pressure, taking profit pressure up here, and I'm no longer I'm a buyer on the dip until I saw this price action. I'm like, oh, okay, we'll just see what happens. Right? If it goes back to selling US dollar across the board, that'd be great, but I'm not convinced at all. I'm very much gone to neutral, and so yeah, I will be closing these trades out if it doesn't perform soon. So yeah, I mean, 20 to 30% of the time, you should expect the market to go against you. I'm just surprised that it did yesterday, because it was the signaling to me was really strong that we're going to have something here, and it was just off. Perhaps this stock market got spooked by that lack of confidence in the Fed. We'll see if that's something more serious going forward. I mean, it wasn't a huge sell-off in the stocks, but it was first little bit of weakness that we saw for a while. And it wasn't that aggressive either. I mean, they made a bit of hoo-ha about it in the press, but just a few failures up top. Nothing too crazy. Today is pretty important though, obviously. mean, DAX, we sold the DAX yesterday on that rally. Got out. Now it's having another go. It's got a bit of relentless feel about it. Probably don't try and sell that again. In theory, if the DAX sells off, though, it should help the euro, and it hasn't so far. But yeah, I'm not too fussed. I mean, this is all happening in the backdrop of no economic data, right? There's no economic data doing this. This is all bond markets and Fed expectations and oil movement, and somewhat with the commodity currencies, positions got a little stretched, namely in the Aussie and the Kiwi. That's why the Kiwi, I think, is doing what it's doing. It seemed too easy that the market rallied afterwards, but what was probably too easy is that the market was not going to hold its gains after the RBNZ. So I'm very interested to see what happens here, because most of my clients trade Aussie, right? And it seems to me to be giving off some exhaustion after its relentless rally. So I pull back, a bigger pullback towards the lower 60, 76, 50, 76, 40, 76, 30. That would be healthy in this uptrend. You need that every now and again. But yeah, I'm not convinced that it's just going to go straight back up yet. I mean, it definitely can, right? And you shouldn't listen to me after yesterday's calls anyway. So is the pound going to come back up again? It's a bigger effort now. It's a much bigger effort now. The whole weak US dollar thing, that was this whole rally, right? Now this is a collapse in the UK bonds, in the bond yields. But, now we're here. We're pretty close to those previous lows. Let's go back in time. 128. All right, 128 is likely to be tested. Maybe we can have a sniff around there. If we get that. I'd be hesitant on even buying any sharp rally here as well. I just don't want to be caught long again. A little bit jaded on the pound. Yeah, sometimes it's not worth trading. I mean, the current market is maybe a little untradeable, giving off false signals everywhere. But I mean, if you sit down and trade, right, you're going to find a trade somewhere. I'm definitely stepped back now, reviewing what the whole weak US dollar thesis is going to come through or not. And that's just in one day, right? So I'm constantly evolving my sort of trade ideas here. But yeah, I'm very disappointed here that they didn't get follow through on the euro in particular. We'll have a look at what the banks are saying about that price action yesterday. I mean, trying to make sense of some of the moves lately is just crazy, right? That Kiwi. I mean, I'll laugh if this Kiwi is back below 71. It's just going to be, people are going to chuck, pull their hair out, chuck tantrums everywhere. We'll see though. Any questions, boys, or charts you want to look at? A lot of crosses in play. A lot of crosses in play. Crosses is where the game's at the moment, actually. You can get away from trading the US dollar part of the pairs. Okay, Nikki, we did have a talk about cable. It looks pretty weak, mate. Looks pretty weak. I'd be surprised if we get back above 130 today, given the amount of negative press that came out overnight and the reaction in the bond markets. We're going to find some more details about that for you in some of the reports we're going to look at in a second. But it was basically a global bond yield sell-off overnight, and it was it hit the US as well, but it hit the UK bigger. And if you get big enough movements in the bond market, you get risk off trade in the stock market, and then you get safe haven demand for the US. So that's the connection in the market there that I was caught off guard by while I was sleeping last night, because I sleep during the US session. I was actually watching the RBNZ from bed, and I thought for a second they didn't cut. You know, that's how fast that reaction on the top side. I was like, what is going on here? You know, because I know the whole buy the dip game. We played that with the RBA quite well. But it wasn't just buy the dip, it was tear a new one. You know, and it was so sharp as well. Within 10 seconds, it was above 73. We'll go into what the RBNZ said. Basically, Wheeler fucked up. Wheeler fucked up big time. He had big opportunity and a responsibility to talk it down. He made up for a little bit later. He did make it up for a little bit later. He came out and he warned about intervention. And we'll talk about what he did there. And he's intervened twice already. You know, in the last couple of years, he's intervened twice already. So, you know, this is a central bank that intervenes. We're talking about the RBNZ now. So when he warns it, and he didn't really warn it, he just hinted that he's, you know, we'll talk about what he said. It's interesting stuff. He's obviously was disappointed with the initial reaction. Wow. All right, this is just talking about what's going to happen in the UK economy. It's a bit wordy, and it's not really something we need to look at just yet. So, in the statement today, they did say that they're worried about the New Zealand dollar. In the conference after, Wheeler said that they expected the Kiwi dollar to rally afterwards. I mean, you don't say that stuff. They did link monetary policy with the exchange rate, though. So if it does get a little bit higher, that could be a self-limiting cap on it. The higher it goes, the more likely they cut. But all in all, it was quite dovish in terms of they didn't really explicitly say they're going to cut soon. And, you know, the market just took advantage of that. And because it was only a 0.25 rather than a 0.5 anyway, it was priced in a 0.25 with a small chance of a 0.5. So there's always going to be a small bounce. the market actually rallied quite sharply until there was that statement about basically Wheeler said the market knows that we have a stoplight approach to a traffic light approach to intervention, and that got the market taking profit. I mean, look, the conditions in which they intervene is very specific over in the RBNZ, and it's not the current scenario, but just talking about it, sort of like jawboning that the BOJ does, it does get the market to rally, to fall off. But there is an article that talks about the RBNZ traffic light system, that's for sure. I'm just going to quickly check what's going on in the bonds. Jesus Christ. If this happens, what they're talking about here, that's pound low 120s, guys. That's pretty crazy. See if I can get for you a chart of the UK gilts. Just one sec. Oh, maybe we just put it in. Alright, so from January down to now, you got the 10 years just collapsing here. Alright, so this is, basically you can envisage what they expect the interest rates to be in 10 years' time from this. The only major economy which hasn't had a collapse in their 10 years is the US, but it's starting to collapse as well. Alright, and if it does, then that would be the big trigger for the US dollar sell I was talking about. But at the moment, all the attention is on the UK yields. So it didn't stop with the Brexit. It's still continuing here, and continuing quite sharply. And it's a relatively large bond, right? I mean, this sort of movement really does undermine your currency. That's deceptive, the amount of movement, because it's in this type of crazy old line chart. That's a lot. So the further this yield falls, the lower the demand for long-term UK assets is. Yeah, so the less investment flow, but just generally as well, people and computers, specifically computers, like algorithms, they sell on this sort of move. And they're saying there's a lot more to go, back to zero maybe. So, well, if that happens, it's going to be very hard for the cable to rally unless it also happens in the US bonds, which is what some bond traders expect to happen. But we'll go into that sometime. That's a little bit away from FX, but it's very important to know this as an FX trader. Okay, well, how the bond market impacts the currencies. Quite simply, higher yields on the bonds equals higher currency. All right, let's have a look at a bit of the bigger term supports though. Euro, we can't really trade that off the technicals, guys. Just waiting for that breakout. I mean, you can trade internally, but I don't trade for small pips usually, so I'm not really interested in the current movement. I'm hoping that it's to the top side, and that's where I'm positioning myself a little bit here, but I'll definitely be buying more if we start to show strength. So small longs, but wait for more strength. Dollar yen, it seems likely we're going to test 100 at some point. You know, it is all dependent really on stock markets and the US dollar, but stock markets down, you know, we test 100 probably, because there's, you say the yen's a bigger safe haven than the US, and US dollar down, we're going to test 100. So you need a pretty funny scenario here where dollar yen doesn't go down. It's you know, I don't see it just at the moment. So that's why I'm a bit cautious here on the dollar yen. I mean, I'm one of the biggest buyers out there of the dollar yen, right? If you know me for the last 5 years, if you've been in this website for the last 5 years, I love to buy dollar yen, and I'm not interested in buying this dip yet, at all. And the yen crosses, you can't really buy until you get that reaction as well. Until you get some stability on the major, either complete decoupling from what's going on in the rest of the market, or you get you know, some reason to instigate a rally. All right, the pound, obviously 128, well 127.98, and then the rest of these levels are just made up, right, underneath 128, just extensions of where the market should go to. 125 is a bit of a big level that's talked about by banks post-Brexit. 125 is a target. So below 125, we're getting quite cheap. Quite cheap. I'm talking like buy and hold forever type cheap. Don't take a loss type cheap. No, I mean, nothing says that we can't go to parity, right? But that would be weird. It would take a few events to get us even lower, sustainably lower. But this is not a stock market, right? A country can't go bankrupt. It can just be underperforming for a little bit. And you have to go back 30 years to see the currency rate lower than 128. Avoid dollar Swiss at the moment. It's a little tricky. I won't go into why. Aussie dollar. Okay, so the false break, well, not the false break, but the struggle above 77 is clear. I'm not interested in buying anyway until we get a pullback. Also, I'm very concerned just that maybe we are overextended and that stocks might be going in for some downside at some point here. So I'll let it wash out. What would be great here is if we get some Aussie dollar selling and dollar yen selling, and then we can pick up the best carry trade of all. And we talked about this with the Kiwi yen. If we can buy some Aussie yen significantly lower, so let's bring up some Aussie yen charts here. I mean, really what you want to be buying is, if you like the carry, you want to be buying the Aussie yen down in the low 70s. If you can get the Aussie in the low 70s, that's a nice little level to be buying. The Kiwi yen in the low 70s as well. Maybe 68, 69. All right, that's if we get a big sell-off in the stock market, dollar yen dipping below 100, and these commodity currencies coming under pressure because of risk-off trade, in the stock market's falling a couple hundred pips a day or something for a week, then you'll see those levels down that we just talked about, 68 on dollar yen, on Kiwi yen, and 72 on Aussie yen, and that'll be a really nice level to buy, guys. Buy and hold. Well, sniff around to buy. Don't just buy because that, right? That's how I blew up my first account. That was Lehman Brothers. Halfway through that day, I said, well, it can't fall much further. Yeah, yeah. Yeah, it could. I think I was buying at 70. Fell all the way down to the 55. But that was moving 200 or 300 pips an hour. That was the days to trade. Oh, Lehman Brothers. You'd think I would have learned risk management and never broken it again, but I've probably broken it twice since then. You know, the worst thing that can happen to you, and I say this a lot, you know, when I'm streaming, the worst thing that can happen to you is not have a bad beat for a couple of months. Then you become invincible, right? Then the rules don't apply to you anymore. But that's the hubris that's going to lead to your death at some point. Kiwi is a little bit more interesting here. Yeah, look, I'm not interested in trading it. It's just a little bit unpredictable at the moment. I'm more interested in buying dips than selling rallies, but I'm not really that interested in buying the dips either. And dollar CAD, while it did have some potential to play catch up, now that oil's rolled over, it's probably best to leave this one alone. This is yesterday. So quite a sharp 3 or 4% drop in oil. Just go back in time a little bit. Yeah, I mean that could be over. That little bounce could be over now. So yeah, going forward here, I'm considering a lot of my trade ideas, and I'm just sort of sitting on the sidelines again, waiting to see what happens. I am ready for a US dollar sell-off. I'm just we didn't get it yesterday, and so you saw me close out most of my trades just before. Alright guys, any questions today? Otherwise we might leave it there. Alright guys, I'll be back tomorrow at 9 GMT.